It's Wednesday, the 30th of June, 2021. Welcome to the Fear and Greed Business Headlines, the business news you need in just 5 minutes. I'm Sean Aylmer. In today's headlines, 12 million Australians are now in lockdown as confusion reigns over the rollout of the AstraZeneca vaccine. Plus, gold has its worst month in more than 4 years. Bank shareholders should get ready for a buyback and dividend bonanza. And big mining companies warned about keeping up good relations with traditional owners. Our lead story today, there are now 12 million Australians in lockdown after 23 new community-transmitted cases of COVID-19 were announced across the country yesterday. New South Wales, Queensland, Western Australia and Northern Territory all now have lockdowns in place for their capital cities and some regions. The shutdowns came as state premiers and medical experts said they weren't advised of the federal government's decision to allow the AstraZeneca vaccine to be given to any adult ahead of Prime Minister Scott Morrison's announcement on Monday night. It was not, as has been assumed, part of a national cabinet decision. The Australian Medical Association yesterday advised patients under the age of 60 to follow the advice of top immunisation experts and get the Pfizer vaccine instead of AstraZeneca. New South Wales is still the main hotspot for the Delta COVID-19 outbreak. The state announced 19 new community cases yesterday, of which 17 were linked. Ironically, Victoria is now just about the safest place in the country. Queensland Premier Anastasia Palaszczuk and Victorian Premier Daniel Andrews yesterday called for fewer international arrivals, while New South Wales Premier Gladys Berejiklian said she was frustrated at the pace of vaccine rollouts. While there have been around 7.5 million jabs administered, less than 5% of the population is fully inoculated. The Australian newspaper is reporting this morning that health officials have approved a nationwide rollout of pharmacy vaccinations, which would accelerate inoculations. Clearly, there's plenty of confusion about all this and what individuals should do, and state premiers aren't happy. But like I said yesterday, get vaccinated. In overseas news, Facebook's share price has risen consistently over the past 3 months, and this week it joined the $1 trillion club. It's the fifth US company to breach the mark in market capitalization terms, joining Apple, Microsoft, Amazon and Alphabet, parent of Google. As a comparison, Facebook is now worth almost as much as the top 20 companies on the ASX combined. The surge in Facebook's share price came as a US judge dismissed 2 antitrust lawsuits against the company, one from the Federal Trade Commission and another from a group of states, damaging efforts by the regulators to rein in the tech giant. The judge said the federal agency hadn't shown that Facebook had monopoly power over the social networking market. The former chair of the world's biggest pension fund believes there's signs of a bubble in environmental, social and governance investing, and funds needed to consider how much ESG assets contributed to returns. Ijai Hirano was chair of the board of governors of Japan's government pension fund until 2017, a period when the fund became a world leader in ESG investment. But yesterday, he said it was time for the fund to decide if ESG was profitable or not. And the price of gold was lower overnight. The precious metal now looks like recording its biggest monthly drop in 4 years during June. Rising US stocks and a stronger greenback have contributed to the fall. The price of an ounce of gold is down more than 7% this month. Locally, if you're a bank shareholder, you can expect bigger dividends over the next 6 months, according to research house Morningstar. The group said the big four banks will return about $34 billion in excess capital to shareholders over the next 3 years. Share buybacks are a possibility, so too bigger dividend payments. Morningstar said if the banks boosted their dividend payments to 100% of profits, they'd be trading on a dividend yield of up to 6%. Given a term deposit is paying less than 1%, that's a pretty attractive yield. It's a long way from 12 months ago when banks were cutting payouts. Collins Food, owner of KFC Australia, reported higher revenue and profit for the 2021 financial year, which ended on May 2. Same-store sales surged and total revenue at KFC outlets passed $1 billion for the first time. Since then, sales have been a bit more muted, particularly in its Taco Bell stores, and that triggered a 6% fall in its share price yesterday. Notwithstanding that drop, there's something going right at Collins Food, based on my family at least. A few years ago, none of my kids ate KFC. Today, they all do, and so do their friends. In fact, it's almost their preferred fast food option. Not sure the chicken tastes different, but something is better. Retailer Kathmandu said total sales would fall below expectations as a result of COVID-19 lockdowns in Australia. The group's 40 stores in New South Wales are closed for at least 2 weeks, and 26 in Western Australia won't open for at least 4 days. The commentary came as confusion among New South Wales retailers grew over whether they can stay open. While there's a lockdown going on and people are only able to leave home for essential reasons, stores are allowed to open. David Jones, Country Road, Spotlight, Optus and Officeworks are all open, while Myer is closed. Very confusing. And Moody's Investor Service said major resource companies could be downgraded if they don't maintain a good working relationship with traditional owners where they operate. The report from the ratings agency, released yesterday, said a miner's social licence to operate was increasingly important, and Moody's was watching relationships closely, even if the letter of the law was being followed. That's the Fear and Greed business headlines for today. Make sure you hit follow so you get it every morning. And if you'd like more detail and more stories, search for our longer daily podcast called Fear and Greed. We also release a daily interview. Today we're talking to Commonwealth Bank Chief Economist Stephen Halmarick about when interest rates will go up. I'll be back later with the afternoon market report. I'm Sean Aylmer. Have a great day.